So the tax management, when we talk about it, tax management is definitely involved, total compliance, maintaining the necessary register, filing the return, making the payment in time, observing the legal formalities, everything. As you are a company secretary, you are all aware that our job is only to comply with it totally, which we are actually complying with it. So that is the thing. Correct? Yeah. So next thing is, when we talk about it, what is the objective of the tax planning? Objective of the tax planning is, when you plan your tax, you can actually pay less tax. You can reduce to the greater extent which is the permissible limit. So there is a reduction of the tax liability take place. And again, there is a minimization of litigation, because when you are actually doing the job within the permissible provisions of the Act, disputes are much lesser. We don't get into litigation, dispute, etc. and other things. Production investment, because normally when you do everything is comply, you are concentrating the business, you are able to do things much better. And of course, meeting the growth of the company, because government depends upon the tax revenue. When the tax revenue goes to the exchequer, it is actually spent on the growth of the country, and even we also grow, company grows, everything grows. Economic stability, you know, that is there when we are observing everything. Healthy growth of the economy, needless to mention, smooth flow of the taxes. These are all the objective of the tax planning is coming. What is the importance? Importance is, timing is very important. We are doing the time in thing. If you don't do in time, then late filing, non-compliance, etc. will be there. If you are able to claim in the time, you are able to claim it. If the time is gone, then you will not be able to claim it. For example, if you are to invest before 31st of the March, you are saving. If you don't invest it, you lose it. So timing is very, very crucial if you want to get the deductions. Tax planning is definitely much relevant. If you plan, everything will go well. You are also doing the same thing, no, for your studies. Are you not planning? When your examination 6 months down the line, are you not planning what module, how much time, how I have to spend, which is the easy subject, which is the tough subject? All the things you are also doing. The same thing comes in the companies also. And similarly, incentives of the government, which have been actually announced from time to time, which we are able to take. That is another thing. Adequate time for the tax planning, a whole year there we can plan. That is why they are saying quarter to quarter, advance payment tax, etc. Enable the bare burden of the taxes during the inflation. So if you are actually there during the inflation time also, you can sustain. Capital formation attracts huge deduction. Because here what happens is, when the capital formation attracts huge deduction, in the sense, when you invest in the startup industry, etc., and other things and all, even the long-term capital, you are given a certain benefit, etc. You can have money saved is the money. Yeah, that is a normal saying which is said. Then we talk about what is the essential of the tax planning. One thing is very clear, we need to be updated. Without updation, nothing. We need to know what is the current law, what is applicable, what is the exemption, what is the deduction, what is the rebate, that is required. Then disclosure, very important. You are all studying the corporate governance, you know. Similarly, income tax department also, we need to be transparent and disclosure, everything should be there. We cannot do the wrong information or faulty information, concealing the fact, etc. Planning within the framework of the law, needless to mention that it doesn't call any explanation. Capability to achieve desired objectives and amenable to change. That means whatever the changes are taking place, we have to work with that. Change is always permanent. Permissible tax planning. This is one thing. It doesn't call for any explanation at all. What is permitted under the different provisions of the Act? Where we get the exemption. It can be an exemption. It can be general exemption, specific exemption. It can be conditional exemption. It can be concession. It can be rebate. It can be exemption. It may be concession, or it can be deduction. Whatever it is, within the framework of the law, whatever permissible, we should be able to take advantage. That is all. It calls for the important concept in this chapter. So, do you understand this? Because you will be asked with reference to testing your knowledge with reference to the tax provisions. State with reason whether the following acts can be considered as an act of the tax planning, tax management, tax avoidance or tax evasion. Starting a business in an industry backward state which will entitle assessee to claim deduction under section 80 IB, whether it is the tax planning, tax management, tax avoidance or tax evasion. Transferring the assets to another person without adequate considerations. Installation of the air conditioner costing 75,000 rupees, the register of the director as per the terms of appointment, but treating it as a plant installed in a quality control section of the factory. Mr. D is a working partner in the firm and he is entitled to a salary of 30,000 rupees per month. He treats this as a salary instead of business income. X and Y Limited maintain adequate records and reduce the tax deduction at source by it enable timely compliance of the legal provisions. What do you think? This is all these actions A, B, C, D. Very easy, na? There should be. I have something more also. Let us look into. Starting a business in an industry, backward industry, see here it is. Let us go through the answer, whatever is there you can verify. The first question, starting the industry, taking advantage is nothing but it is a tax planning. Because you have decided to do the tax planning, so you are taking the advantage. Is that correct? Second question, without adequate consideration, it is a tax avoidance. That we also discussed. The third thing is there, totally a tax evasion, because air conditioner, we discussed in the beginning, I gave you the example also. Then again, the reduce the tax liability, he is actually misrepresenting, because it is a partnership. Partnership income is actually income from the partnership, but he is treating a salary income so that there is a tax deduction rate is different, so it is a tax evasion. And of course, the last column which is maintaining, doing the complaints, etc. is the tax management. Is it simple or not? Very simple, no? Yeah. Sometimes you can be put to test like that. Now let us look into this. Now this is another thing, similar lines. Setting up a license office in India for a foreign company instead of a full-fledged establishment to run the business activities in India. What do you say? Investment in bonds approved for the purpose of section 54 EC. Businessman claiming a depreciation of a refrigerator purchased for residential use. Visiting a foreign country for certain number of days to reduce the number of days stay in India. Associate has 2 residential houses. He wants to sell a vacant purchase 6 years back. To avail the exemption under section 54E, he gets residential house to his minor son. What do you think? I have some more here. Depositing 70,000 rupees in PPF account to avail deduction under the section 80C. Using a motor car for personal purposes but charges as a business expenditure incurred. You can see from here itself what category it falls, isn't it? Yeah? Again easy. Let us look into. First thing is tax planning, taking advantage within the permissive law. Second thing is also tax planning because you are investing in the bond which was approved by the government. Third thing is totally a evasion because it is the refrigerator residential you are charging in the office. It is a tax evasion. The third thing is number of days to reduce the country. It is a tax avoidance. Okay. This is actually not illegal. This is permitted because if you are there 180 days overseas country, income earned outside country is definitely not taxable. This is tax, you are avoiding the tax by doing the condition. There is nothing wrong in it. Depositing PPF account, it is again the tax planning because he is availing the concession which are given by the government. Motorcycle, tax evasion again. So these sort of the questions could be asked. It has been asked in the past the question paper also. If you go through it, even December 2019 also questions have been asked in this similar line. You might have noticed. Then you could be asked the concept distinction between these concepts. Can you distinguish between the tax evasion and the tax avoidance? What is the tax management and the tax planning? Okay. Planning is the first stage. Planning is what you want to do actually. That is the tax planning. That means you in the beginning of the year you decide this is what I am going to do, this is going to be my revenue, this is going to be my quarter wise, first quarter, second quarter, third quarter, this is what I will do, this time I will pay this time I will pay this I will do that. That is your tax planning. When it comes to tax management, what you have planned, you are managing it. That is the tax management. That means keeping the records, tracking, monitoring the thing, whether that is happening. If anything is changing in between, accordingly you adjust it. It is similar to what you do. You actually plan your study, isn't it? You plan next 1 week I am going to study for next 7 days. This subject, this many hours, I will complete so many chapters. That is the planning. Management is what? Management is, am I spending so much time every day? What I have actually decided? Have I completed what I want to do? That is actually a managing. This is the difference. Yeah. Planning is a framework. Management is see that everything is managed as planned. That is the management. Okay. So here you can actually talk about it. When you talk about the tax evasion, that means dishonest means suppression, concealment, violation, not abiding, all those things you can talk about it. This will definitely involve payment of the tax, liability, everything will come. But the tax avoidance means you plan, you try to minimize whatever the tax burden, but within the legal framework. Because you are permitted, you are doing that, you take the advantage of it. That is the main difference which you have to explain. Similarly, you can of income. Have you heard of that? Very good. Are you aware? This concept? No? Okay. Let me tell you the difference what is actually happening. Because one thing is there, when you actually have an income, what you do is income, you get the income, okay, but it is not coming directly to the person who is entitled, it is actually diverted to somebody else. That is what it is known as the diversion. So diversion of the income means, now for example, the company declares the dividend. When the company declares the dividend, now what happens, the money is actually going to come to you. Okay, but at the source they deduct the tax. Isn't it? That means before the total income giving it to you, it is actually fabricated. Yeah, that is one. Another thing is there, what also in case of the diversion of the income in the sense what happens, there is a tax deduction at source which actually comes into the play. Tax is always deducted and paid. But the application of the income means the money actually comes to him. He actually applied subsequently to discharge his obligation. So which means what he is doing is, for example, you may be knowing what you call reverse charge mechanism. If you receive the service, if tax is required to be paid, the entire thing comes to us. In fact, he discharges the obligations. That means he pays the tax. That is what the application of the income which actually happens here. So in the application of the income is, the receipts of the income is comes and then you discharge the obligation. In case of the diversion of the income, before the money goes, the tax is actually deducted at source. This is the thing. So these two things you have to try to understand when we talk about the diversion. And normally when the diversion of the income means it is not into the total income because you actually show data of income. Because you might have seen when the dividend income, because dividend distribution tax is actually paid, it is not actually included in the income because it is a tax-free income. But whereas if you pay the tax, it is included in the income and then subsequently you deduct the tax, you show that. Are you getting the difference? So that means you show the income, you apply what is the tax liability and then you show it. That is the difference. This probably you have to explain. Tax planning and tax management. Just now we discussed this. Tax planning and tax management means tax planning is a term where you actually do how to manage. That is the thing. Okay. Because tax planning is the one where you actually do the first step. That is the starting point. This is the way I am going to do, this is the way I go about it, this is what I am going to do it. But the tax management is what actually planned, that actually managed by you. So that you are trying to comply with, you are maintaining the necessary register, you are taking the proof, you are having a challan, also sort of a thing what you are doing, that is the tax management. That probably you can explain. Then they can ask you also tax planning and tax avoidance. Tax planning you are aware, tax avoidance is again within the permissible limit, whatever the conditions which are laid down by the law, if you actually fulfill, then in such a case, you can avoid the tax. Now we saw, by suppose you have traveled to the overseas about 160 days. Okay, you earn some income. But if you are 180 days outside the country, that income is actually exempted from tax. But if it is lesser than that, that is subject to tax. So you undertake another 30 days for overseas, you make it 180 days, you become a non-resident Indian. Correct? That is fully permitted. So that what you do is you take advantage of it. That is where you see what you are doing is whatever the tax is payable, can I actually require to pay the tax? Can I actually avoid the tax within the permissible limit? That is the thing. That is actually a tax avoidance, not tax evasion. Tax evasion is doing illegal things. The example what we discussed, having a refrigerator purchased for the personal use, charging to the company, AC installed in the residential, charging to the company, like that. So that is actually a tax evasion. Okay. So I think this probably you can explain actually. Correct? Yeah? Easy one? These concepts? Okay. Now let us look into some of the descriptive questions. Some of the descriptive questions they might ask you. Make an analysis between the purchase and the taking on lease of an asset for the purpose of business by the assessee, considering the income tax provision and the benefit available. That means they are talking purchase and the taking on lease. That means you want to buy on your own or you want to lease it out. So what are the tax provision, what are the implications? Even if you apply your common mind also you know, when you purchase what happens? It becomes your own asset, it remains with you, you are entitled for depreciation. Is that correct? Yeah. But only thing is if you want to buy, you need to have money. Correct? Without money you can't buy. If you don't have money, you have to borrow. Borrow will involve cost. Correct? Yeah. If you want to lease, property is not yours, it is somebody else. You are going to use it. You are going to pay monthly payment. Correct? Yeah. Here also if you are using for the business purposes, the same facility of the depreciation will be available to you. But you don't have to pay the money upfront. Correct? So probably this is what you have to compare. But one thing is there very clear. Because here the question is, they say make an analysis between purchase and taking a lease. What is actually missing is whether the company is having enough money or not, that is not there. So the situation will differ between the company to company who are actually cash rich company who are not having a cash rich company. That situation will come in. So probably you have to bring out these things when you are talking. Now let us look into that. In case of the purchase, depreciation is allowed under section 32. On the other hand, depreciation will not be allowed section, but however, lease rentals will be allowed. Correct? That is one thing, as a expenditure. Okay, because lease rent can be avoided as a deduction, but you can't take a depreciation because it is not your own asset. But lease rental will be allowed as a expenditure. That is one thing. In case of the purchase, insurance premium, current repair, etc. is allowed as a deduction. And probably if you use the borrowed money, then interest also can be allowed on that. But the purchase of machinery, you will have the assets with you. But in case of the lease, you will not have the assets with you. And after the assets are sold, then it is subject to capital gain liability. Whatever the things are all coming into there. So that means some benefits are available here, some benefits are available there. Both the things are working together. So what you have to do is, if the question has been asked here, what are the benefit available with reference to the real circumstances, you have to work out separately under the both the situation and you have to analyze. But the very important thing is the money factor. Cash required, borrowing cost, whether investing the own money or borrowing the money, that should be taken into the consideration. Then one has to take a concrete decision on that. That is what you have to explain. Yeah? Because you can't give the straight answer, lease is better or purchase better, you can't give that answer. Are you getting it? Yeah. Then let us look into some of the practical questions. Now you have been asked here. This is a very practical question they are asking. Advise Rashmi suitably to minimize her tax liability based on the facts. Okay. Let us look into this. Here Rashmi want to reduce her tax liability based on the facts given below. She is an Indian citizen, joined University of Toronto as a professor of Canada on a monthly salary of Canadian dollar 10,000 on 1st April 2018. She wants to come to India for the year 2020 to stay continuously for a period of 11 months to complete her house construction in Delhi. She wants to know whether she can avoid payment of the income tax legally on her foreign income earned. What do you say? So she wants to come in 2020. If you apply your mind, you can find a solution. Isn't it, Varsha? 182 days. That means the 11 months she has to spread over in the two different financial years. Is that correct? Yeah. Because to fulfill 180 days. That means she has to maintain 182 days. She remains in the year 1920 and also she remains 180 days in 2021. That is the way she has to plan. That means what she has to do is she has to plan her 11 months holiday in such a way half of the things falls in the early year, half of the things falls in the next year. This is what she has to do. Because 182 days. So that means what you have to do, she has to spread over in two financial years so that the income earned will be saved. That is the advice you have to give. Is that correct? See, this question is very, very simple. It is not that difficult. But if you actually notice the way the question has been put up, your answer, if you derive correctly, definitely it is 5 to 6 marks this question will carry. Yeah? Very easy one. Okay. Now let us look into the next one. One more thing is here. An employee with XYZ Limited, his salary is 1 lakh rupees per month. He is also paid a house rent around 20,000 per month. His wife B is also employed at a salary of 40,000 per month with ABC Limited, where A holds 20% share. B does not hold adequate qualifications for the post which she is holding. B, the owner of the house, which is self-occupied by the family. The house was constructed in the year 2015-16 with the borrowed funds. suggests a scheme of tax planning to modify the tax liability for the financial year 18-19. Assessment year 19. See, the problem here is A holds 20% shares in that company where B is employed. And she is getting 40,000 rupees salary, but she is not adequately qualified. That means she is occupying the place of profit. That is number one. Number two is, there is a house which is involved, where it is actually on the borrowed funds, really speaking, and B is the owner of the house. But A is getting a house rent around for 20,000. As you are aware, in the taxation, even though you are a husband and wife, the income earned by the husband and the income earned by the wife, they are treated differently, two individuals. So really speaking here, if the B is the owner of the house, A can actually take this house on rent, lease. So that what happens is he can actually claim the rent deduction, and she can actually claim on the borrowed capital interest exemption. That is one way of doing it. Correct? And to avoid that place of profit occupation because of the substantial holding of the shares, what do you think? Deepika? You may be knowing better, I believe. Varsha also will be knowing it, because you also studied, I think, in the executive program. No idea. See, it's very simple. Your application of the mind. Because 20% gets reduced. 20% is subtract loading. Anything less than 20%, then that place of profit concept will go away. At least you have to reduce minimum 1%. If we can reduce further, it's nothing. That is one. Second is self-occupied. That should be actually treated as a rent. So that what happens is that 40,000 rupees per month, which is actually rent, he can obtain the receipt and he can actually take the rent deduction, advantage of the income tax, that you can do. And the next thing is, we can claim the exemption for the interest payment. So that is how they can reduce. No? Because these are all permissible means of reducing your tax. That is where they are testing your knowledge. No, Deepika? So that is why I keep on telling you know to remember the concept what is available. Now let us look into this. From the following information, advise to which shall be the better option to repair or replacement of the machine. This is the company. The company is actually having a machine. The cost of the repair is going to be 90,000. The machine work for 4 years. And the expenditure of 18 lakh rupees shall be incurred on the purchase of the new machine. And the scrap value of the machine in 10 years, which will be 72,000 rupees. On purchase of the new machine, the production will increase and the profit of the organization will increase from 9 lakh to 15 lakh per year. A rate of interest is 15% on the purchase because of the borrowed capital. The old machine, which can be sold at present at 1,50,000, and after 4 years it will be sold at 30,000. The rate of income tax is 30%, no surcharge is payable. Education is applicable as per the rules. So what you should do in this case? You should actually work it out, taking into consideration what is the cost of the purchase, what are the various expenditure, because it has already given the years at the scrap value. So you can find out what is the yearly charge, you can actually see the machine charge, repair charge you can see. And again they are also talking with reference to the production increase, how much it will happen the new purchase, you have to take into consideration, apply the tax rate, whichever is beneficial you should advise. Will you be able to do this? Can you try? Actually do 2 columns. You should say actually what is the repair and you should see what is the replacement. That is what you have to do. So you have to actually find out what is the annual expenditure is going to come in both the cases. In case of the repair, they give the repair. In case of the machine, you have to work out the depreciation. Then of course borrowed capital interest cost you have to take. On the owned machine also you can work it out what is the depreciation because they given the conditions here. And then you will actually find out what is the total expenditure. Then you can see what is the expected profit is going to come, then reduce whatever the expenditure, then find out what is the net profit before tax, after tax, and compare. Yeah. Once you finish this first slide, you tell me, then I will go to the second slide. What do you think is beneficial, repair or replacement? Okay, let us look into, just check it out whether you have done this. This is what I said, you have to give the comparative chart. What is the repair, what is the replacement. If you do that, then that will be better. So you have to find out what is the annual repairing charges. They are already given 90,000 divided by 4, that means 22,500 rupees. You have to keep this information with you. Depreciation of the new machinery, you know cost minus scrap value, that means life of the asset, 18 lakh minus 72 divided by 10, 1,72,000. Depreciation of the owned machinery, there also they given what is the present value, what is the sales value, balance life. So 150 minus 30 divided by 4, 30,000. This basic information you need to work out. Hope you have done this. Then you have to prepare a chart. Annual operating charges 22,500 in case of the repair. Depreciation of the new machine 1,72,000. Interest on borrowed capital, they are already given 18 lakh into 15%, which will work out 2,70,000. Depreciation of the owned machine, we have worked out 30,000. So total expenditure is going to be 52,500 in case of the repair, 4,42,800 in case of the replacement. This is the detail we have. Now coming to profit, in case of the repair, there is no increase. It is going to be only 9 lakh. In case of the replacement, the profit is going to, the income is going to increase 15 lakh. So expenditure 52,500 goes in the first case, 4,42,800 goes in the second case. So net profit will be 847, 1057. Income tax is 30%, 30.9 because the education tax is to be added. So 261, 326. So profit after tax 585, 652, 730, 525. Now which option is better? You tell me. These are simple mathematical calculations. That is all, nothing else is there. Yeah? Are you getting it? Deepika, did you get this? Final conclusion? No. Why? Where you have gone wrong? Tell me one thing, let me go back. Have you not calculated this? Okay, no problem. So this is the basic things you need to work it out. Once you have the detail, then you arrive at the expenditure. Then you take the profit or reduce the expenditure and find out what is beneficial. That's all. Not a complicated one. Yeah.